Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 17th, 2021. I want to talk about heavily shorted stocks, volume greater than 1 million shares and price is greater than $1. With that, shorting a stock means opening a position by borrowing the shares you don't own. And the thought process is when the share comes down in price, you'll return back for a nice profit. A short squeeze occurs when many investors short a stock or bet that the price will go down, but instead stock's price shoots up, for any good reason. Maybe earnings are out, or maybe there's a good FDA approval. So with that, we have one stock here, BLNK, which is heavily shorted, and as you can see here, stock has come down a little bit. Now there is a small uptick, so it's one of the heavily shorted stock, and we can we can go through the analysis to see is it a good time to buy BLNK as an example. So with that, let's jump in and look at the heavily shorted stocks. So these are the heavily shorted stocks. At the top, you have BLNK, $36 stock. Float short is 43%, and then we got Clovis, WOOF, and a few more. We'll go through this in a little more detail and take it from there. So this is a list of 25 heavily shorted stocks, and this list is sorted by the short ratio or float short. All these stocks are transacted 1 million shares as of Friday, and the share price is greater than $1. And I highlighted some stocks here like BLNK, Clovis, Petco Health. Main reason I highlighted them is really there is a good quarter over quarter sales growth, and the gross margin is also good. So that's why I highlighted some of these, and also I highlighted where there is a high valuation or a PS ratio or a price to sales ratio. As you can see here, some of these are heavy valuation, so you got to be a little bit careful when there is a heavy valuation. So generally, I like to, buy the shares for the heavily shorted stocks when there is a good quarter over quarter sales and there's a good gross margin. These are the companies that are fundamentally sound. No matter whether a short squeeze or not, you will always, make money when these stocks are down. I also like to look at RSI or relative strength index. Typically, when the share is when the share is down, short ratio is high, and RSI is low, any good news can cause the share to go up. And then I also highlighted some areas. For example, whenever share is low, heavily shorted, and investors are buying it, the institution's transactions are higher. That means there's a institution interest to buy this share, so there's a chance this will go up. As you can see here, many places we have institutional transactions buying this, and in some cases you can see even the insiders are buying this share. For example, here Intercept Pharma, in this, insiders are buying the share. That's a very good sign. That shows the insiders are convinced that their stock is really down. And in many cases, as you can see here, insiders are selling. This could be for various reasons. For example, they really want to exercise some of their stock options. That could be the reason. So we have to look at this a little carefully, because in many cases there is an insider selling. We got to go into one more level of detail to see, are they really intentionally selling, or is it really a stock option expiration or exercise? So that's one thing we have to look at. So with that, let's jump in a little more detail. And the stocks that I highlighted here are some of my favorites, mainly because there is a good sales growth, there is a good gross margin, and combination of the RSI low, insiders are institutions are buying the share. One of those reasons. And let's jump into some more here. I got 25 more here. We got Tanger Outlet. This could be recovery play. Alt Global Holdings. It's also a nice sales growth here and nice gross margin. And then we got Weibo. Weibo is a Chinese company. We got to be a little bit careful at times, because this stock has a tendency to sometimes go down, stay down for a while. So that's why we got to be a little bit careful and buy when it's really down, and there is a good sign that it'll go up. As an example, if there is a small uptick and there's a consolidation pattern, there's an uptick, then you can think through that this stock will go up. Then we got skills. This is beaten down. We will go into this little more detail. I think it's a good time to initiate a position here. And we've got a couple more here. We'll jump into some of this in a little more detail. And then I got one more batch here, starting from Kala Pharma. Nice quarter-over-quarter sales growth. And Beyond Meat, I think this has gone down a lot of late. Good time to maybe buy a little bit and take it from there. And you can see here Tattooed Chef and Opco Health. One thing I noticed is really insiders are buying the share. Here you can see 132% insider purchasing their own stock, which is a good sign. And then you've got Fastly, which is a good company. I think it's one of the rapidly growing companies, but there's a high short ratio, as you can see here. And stock has, right now it's going up a little bit, which is a good sign. I like to buy when stock is, down, but started making its way up. Then we got a couple more here. We will go through some of these. I like Wayfair also. Wayfair, as you can see here, came down nicely, nicely here. A little bit, not too much, but high short ratio. And we'll jump into some more here. This is the last batch. So we got Jinko Solar Holding, nice sales growth and nice gross margin and high short ratio. And many of these solar stocks, as you know, they've gone down drastically, these couple months. 39% and down for the quarter, 15% down for the month, 1% or 2% down for the week. So some of these I feel like, these are beaten down so much. It may be, good time to jump in a little bit and buy slowly. And then we got, Super League Gaming, Sports Bet Play, Joy, and some of these. We'll look at in a little more detail. And now let's look at few charts to see what we can make out, of in these shares. For example, Blink Charging, as you can see here, stock has done nicely in the past. And it's in a up down pattern here, went down drastically sometimes in February, March. Now it's kind of trying to bounce back, and go up and go down. And what I kind of like about this right now here, as you can see here, RSI is down. It's trying to make its way up here. And the stock, I think there is a small, bounce here with the green candle here. So those are two positives. And if you look at the chart down here, we got Blink Charging. Only one thing I'm not super happy about Blink Charging at this point is high valuation. They got a good sales growth, which is good, good gross margin, and for the auto industry. And they got institutions buying the share because it's beaten down so much. Institutions are buying it, which is good. RSI is low, but only valuation is the concern, which is generally the case in the auto and EV industry. And there is also good news here. City of Plano, Texas upgrades existing EV charging infrastructure to Blink, which is a good news here. So with that, I feel like it's a time to really buy some slowly as it comes down. Buy some. No need to buy a lot at once, but it's good to initiate small position because it's a good play on green. Next is Claudius Oncology. It's again cancer stock. They will treat cancer. As you can see here, stock has up and down and down and up. So it's gone down so drastically, gap down, then gap up. I think it's right now it's at $5.98. And there is also some highlight that this company is providing some clinical data to highlight one of its drug. So with that Clovis $5.98 stock, and as you can see here, high short ratio, they're down 46% in 1 year's time. And as you can see here, they started a little bit, they bounced off a little bit in 1 month's time, but last week they're down 4%. And they got 10% quarter over quarter sales, nice gross margin. I feel like when the stock is down like this, what I typically do is really when it's down so much, if I see positive sales growth, good gross margin, I buy some. I don't buy a lot. I keep buying some. and then once it comes up, I may trade off something and look for next one. So some of these stocks I own for a long time, and some of these short squeeze I might get out when the short squeeze is kind of done. So that's why I like to buy a little bit smaller quantity, so that way I can buy more shares and look for more short squeezes. Next is WOOF. WOOF is again around the Petco, pet health. As you can see, a share, after the IPO, stock has come down drastically, bounced back, came down. Now it's trying to make its way up. And there is also some positive news here. As you can see here, Petco, I think there is the verge of breaking even. So as the company kind of breaks even, that's a good thing. And I also see here, as you can see, RSI, or relative strength index, it's kind of showing some sign of improvement. It just crossed the 50% mark here, which is a good sign. Company is kind of showing some strength here. And if you look at the numbers here, 1 week 4%, and 1 month down 3%, 1 quarter down 22%. So as you can see here, it tries to make its way up here, because now in a weekly interval, weekly time frame, it's positive. And high short ratio down 26%, from 1 year, and insiders buying it, albeit small amount. And RSI is picking up at this point, which is good. Nice quarter over quarter sales and gross margin. Root Inc. This is, looks like this is one of those places where it always comes down, goes up a little bit, but then goes down. This is really, as you can see, a lower lows for most part. That's why I'm passing this. I'm not, buying the Root, because I don't see a catalyst here. Quarter over quarter sales is negative. And only positive here is institutions seem to be buying it 29%. If you really want to speculate, you could buy some when it's down like this. Don't buy a whole lot, because I don't see a catalyst when it comes to quarter over quarter sales growth or gross margin. Next, we look at HUYA. HUYA is a Chinese play here. And if you look at the stock chart here, with whole Archegos fund debacle, many of these Chinese internet stocks have come down drastically. This stock, as you can see here, came down all the way from $36, now $18. So it's 50% off in last month or two. And RSI, as you can see, has tried to pick up. I feel like at this point, because RSI kind of got stable and tried to pick up, there is some chance this will be a good play for the long term. So I'm buying this, because it's a kind of stabilizing and trying to go up from a relative strength index perspective, and also from a share perspective, there are some green shoots, as you can see. And looks like their earnings, latest earnings are showing there is more room to growth with this share. And if you look at HUYA here, 1 year they're down 18%. Half year they're down 18%. And 1 month they're down 28%, 1 week minus 1%. So there is some chance, as you can see here, the drastic steep decline is kind of stopped, and now they're kind of trying to make a slow movement upward. This is when I want to catch these stocks and buy some and hold it for a long time. And positive quarter over quarter sales growth. Gross margin is positive, which is nice, and valuation is pretty low, which is 2.62%. RSI is low, and I like this when RSI is kind of trying to stabilize and trying to pick up. Next is SENS, which is Senseonics. As you can see here, this share has done nothing for a long time. Now it's kind of bouncing up and down. It's a very cheap stock, $1.89 stock. So looks like they also reported some loss, but from an earnings per share perspective, but revenue estimate itself is they did good on that. So with that, if you see here, one thing I always watch is really how is the RSI. RSI at this point is trending down, so that's why I would not be buying this aggressively. If you want to buy some, you can buy a little bit. It's good to see at least RSI is stabilizing or trying to point upwards, but given it's a low $1.89 stock, earnings are out and they are topping the estimates from a revenue perspective. It may be okay to buy some. And if you see here from a numbers perspective, they're down so drastically. Even last week they're down 19%. Typically I like to, as you can see here, down 39% for 1 month, down 19%. So it's gradually kind of, the decline is reduced, but I would like to see a little bit uptick before I jump in and buy more. So that's why I'm buying a little bit and waiting for confirmation that RSI is also pointing up. Next is Fizz, National Beverage. I've been watching this stock for a long time. This is one of those stocks which will go up and fall down drastically. A lot of short sellers on this stock. Also, I like the play at this point because, as you can see here, stock is consolidated a little bit, trying to make its way up. Same story with the with the RSI. RSI also consolidated. Now it's trying to go up, which is a good sign. It's good to buy some and take it from there. And looks like National Beverage stock rating climbs. So I think some of the analysts are also increasing the ratings, which is good. And from a numbers perspective, high short ratio, and 1 year they're really up 112%, which is good. But as you can see here, 1 month a little bit negative, and 1 week they're up. So I think they're trying to make their way up at this point, which is good sign. And quarter over quarter sales is positive and gross margin is positive, low valuation, which is always good. Next is Workhorse. Workhorse is into electric vehicle play, as many of you know. Looks like they got some positive news here that there is a faster time to market. So I think this stock, as you can see here, fell off so steeply here, and now it's trying to make a base and trying to come back. So I think it's a good one to buy for long term. I would buy a little bit here and keep it for a long time. As you can see, our RSI is also trying to point up. So many of these these EV plays, EV stocks are down drastically off late. That's why I'm buying a little bit at a time, so that way I can participate in the sudden up moves. Next, we'll jump into GOGO. GOGO is into the wireless, as many of you know. And with the semiconductor shortage, I think these wireless stocks are really trying to go up as we speak. And from a share perspective, chart perspective, I think they're doing nicely up and down. Now they're trying to consolidate and go up. And the RSI is also trying to pick up a little bit. They're trying to go above the 50% mark at this point, which is good. And looks like Moody's, which is a company that looks at the financials, it upgraded the company, which is good. At least from a financial perspective, there is some upgrade around the stability. And from a number perspective, high short ratio, and stock has done 12% negative for the quarter, 2% negative for the month, 1% negative for the week. So that kind of tells me, there is at least some hope. The steep decline is kind of, it's not as steep. There is some improvement. And institutions are buying the share 28% up, which is good. RSI relative strength index is relatively low, and sales is negative at this point. But gross margin is positive. That's why because it's not double digit negative, there is some semblance of stock going up, and RSI picking up. I'm buying a little bit so that way I can participate in the upward move as the sales goes up. Because gross margin is high, they get to keep some of their money for their operations and whatnot. Next is Nano Dimension. Nano Dimension is really off late. It's a really it's a stock where many of the investors, I think they might have gotten burnt. It used to be very good high flying stock, 3D printing stock, with the electronic chipsets, but it had a steep drop, as you can see here, made its way up again, one more drop. And from a stock perspective, I think there is some small green shoot here, which shows at least there is some positiveness, but it's too soon to call. And from a RSI relative strength index perspective, at least I see some consolidation, which is always good. Looks like those steep downtrend. Probably it won't be there anymore, and looks like there is some consolidation in the RSI and a small tick up, which is always good. And there's a news here from investors' place that Nano Dimension is a small cap growth play with large valuation. That's one thing. In the Nano Dimension, the valuation itself is too high from a price to sales perspective. That's why many of the value investors are really watching out and not buying. But I'm willing to buy at this point a little bit because many times high valuation stocks, if they really do well, their valuation will come down as they show more earnings power and more sales. And they have done really not great. They're down 29% for the quarter, 33% for the month, 6% for the week. They're still up for the year, which is good because they've gone up so drastically in the past. And as you can see here, institutions are buying. That's one of the reasons I'm also buying with the institutions. Institutions kind of understand these things very well. They will buy when everybody's selling. That's why there's a huge tick up in the institution transactions. And quarter over quarter sales is negative because I think they're still trying to work their issues. But I think gross margin is positive, so I'm buying even though valuation is high. Next is IPOE. It's our Chamath's stock. He's one of the famous SPAC person. I think this company bought SoFi. SoFi is a fintech play. I think there is a chance this will kind of consolidate and go up because SoFi, I think it's very famous when it comes to fintech. Many folks are liking it, so I feel like this is probably this will also go up. And if you look at the numbers here, they're down 14% for the quarter, same story for the month, minus 8% for the week. And there is institutions buying it at this point, 361%. That's good. And I think that's why I'm buying this slowly, so that way we can I can make some small position here and participate in any upward movement. Next is SmileDirectClub. SmileDirectClub, this used to be very good story when it became IPO a couple of years ago. This was supposed to be giving run for its money for Invisalign, Align Technologies, but that did not happen. Now, because it's a low dollar stock, short sellers are really, after this stock. But I feel like at this point, according to Motley Fool, it's a high risk, high reward play right now. So stock has consolidated a little bit. It's up and down, as you can see, bounces very nicely, up and down. Now consolidating at $10. As you can see, at $10, there is a good support, as you can see, around $10 level. That's why I think at this point it's okay to buy a little bit and wait for any pullback, and take it from there. And if you look at the number here, they're down drastically for the half year, 14%, quarter, 15% down, 1 month, 12% down, last week, 1% down. I feel like at this point, this can show some signs of strength and make its way up. Nice gross margin, as you can see here. And insiders are selling it, which may be because of a lot of reasons. Institutions are also selling a little lightly, not too much at all. So you can be a contrarian to buy some at this point and hold it for a long time. Next is WPG Washington Prime. Probably I will not touch this at this point because looks like there is some bankruptcy loan that this company took, and sales are not great, negative sales number. They are up a little bit. Probably they got some money, that's why they're up. I would not probably buy this at this time. I don't see too much signs here to upside here. No catalyst that I see. Next is XERS, Coheres Pharma. These guys are into diabetes. I think stock has done. I think they have sold off pretty badly, as you can see here, since February or so. They have sold off pretty badly, and I think they're coming up with a new product. So it's a, let's see, the new product could be good. The stock might go up. And if you look at the numbers here, I like the sales number here, 300% up for the quarter over quarter, 54% up from a 54% gross margin. That's a good thing, good. RSI is very low. As you can see, our RSI is trying to consolidate right now, probably trying to make its way up a little bit. So because stock has come down drastically, there is a positive sales growth, positive gross margin. It's a low price stock. I'm willing to buy at this point and take it from there. Next is E2 Open. E2 Open is a really around transportation management and the business to business type communications. I think this stock has gone down drastically in 2021 early part. Now it's trying to go up a little bit. RSI is still low, and stock is trying to stabilize, as you can see here. And as you see here, insiders are buying it a little bit. It's a small number. RSI is low, and it's come down drastically for the quarter. 15% down, month 3% down, 1 week 1.29% down. So at this point, I feel the stock is stabilizing. It's also recognized by Gartner Magic Quadrant as one of the good transportation companies. So I'm willing to buy a little bit because it's a low dollar stock. There's some positive signs here and take it from there. Next is Clover. Clover, as you can see, here came down drastically in 2021. At this point, I feel like maybe it's okay to buy a little bit and keep it for a long time. I feel like stock RSI is climbing a little bit, and they're also trying to hire a former director of Medicare in the Trump administration, which is good. And if you look at the numbers here from Clovis, I think they're trying to go up a little bit for the month and for the week, so that shows they kind of consolidated now, trying to make its way up. High short ratio, 49% down for the year. Nice quarter over quarter sales. I like that. Institutions are selling, looks like a little bit, which is understandable. There may be some institutions selling. But I think overall, I feel like this is one of those beaten down stocks trying to make its way up. Could be good to buy some and take it from there. Low dollar stock. Next is Inovio Pharma. This guy is supposed to be coming up with the COVID vaccine long time ago, but that didn't materialize. Looks like they're making some news now. As you can see here, they got some vaccine candidate, provides broad cross-reactive immune responses for various variants, which is at least a positive news. I feel like this is one of those plays. On a blue moon, this can go up if there's a good news, and also heavily shorted. And there's institutions buying a little bit, which is always good. Quarter over quarter sales, I would not buy into this too much because their base sales number could be so low. That's why this number is really glorified. High valuation, that's why you got to watch out. Don't buy too much, buy a little bit and wait for a confirmation that stock is going up and RSI is ticking up. Next is Altis USA. I think chart is pretty nice looking chart. Now they're trying to make it their way up. Stock is trying to make its way up, and RSI is also trying to make its way up, which is good. Looks like there is some intrinsic calculation done by Simply Wall Street. It suggests it's down. The valuation is down, undervalued by 41%. And if you look at the sales, there's a positive sales, which is good. There's a nice gross margin. I like that too. And they are down a little bit, not too much. So they're trying to go up at this point, which is good. I would I would buy a little bit given it's heavily shorted and trying to make its way up. Last is Intercept Pharma. As you can see here, this used to be a Wall Street darling long time ago, but now they are kind of lower lows. As you can see here, kind of stock is making series of lower lows. But I feel like there is some positive news here. Insiders are buying the share. You can see a 31% insider transactions positive, which is good. And they got quarter over quarter positive sales. nice gross margin. Any good news in this company can send these shares higher. If there's a sales growth, they get to keep the money because there is a huge gross margin. I feel like this is beaten down so much with the positive quarter over quarter sales, nice gross margin. Insiders buying it, it may be okay to buy some and take it from there. Next, green plains here, nice looking chart. Stock is a little bit down at this point, and also looks like tip ranks says this is one of the monster growth stocks that could soar. High short ratio 25%. These guys are up for the year, up for the half year. They're down for the month and the week. So I think this is when they also have a at least good. I mean, it's okay type gross margin, not great, but at least there's some gross margin. So I would not be buying too much. I would buy a little bit because it's already up so much, and see if it can even go further high. Next is Skt Tanger Outlet. This is one of those recovery play. All these outlet malls have got nice stuff. As people are getting vaccinated, they might go out for shopping because economy will open up. People have to go to work. They might go to outlet to do some shopping. That's why this is nicely bouncing off. After these COVID shots, one of the undervalued stocks here. This can still go up further. Stock is trying to tick up, as you can see here. RSI is also trying to go up. That's a positive confirmation that stock is up, RSI is up, which means at least Wall Street is buying into this story here. Nice gross margin here. Sales growth is a little bit negative, which is understandable with the people working from home and not going out much. And as you can see here, institutions are buying into it because it's probably a recovery play. That's why they're buying into it. They're down for 1 year, up so much. They're down 24% for the yearly high, up 209% for the year. I think 1 month and 1 week. 1 month they're down, 1 week they're up. So I would watch out this, buy a little bit. Even the earnings are coming around the corner. Watch out, look out for the earnings date, and trade carefully. Next is Dpw Alt Global Holding. As you can see, your stock is kind of out, down and out at this time. $2.44. Looks like they got some they got some orders for $10.5 million for the vehicle chargers, which is a good news. At least there's some positive news here. Heavily shorted by 24%. And as you can see here, they're down 56% for the quarter, 37% for the month, 24% for the week. So in this one, I would maybe buy a little bit and look for some confirmation. As stock goes up and RSI ticks up, I would add to my position. Next is Sorrento Therapeutic. This is one of those famous stories. People love this Sorrento Therapeutics, and now I think it's came down so much. Even short sellers love this stock. I think it's okay to buy some and wait for stock to go up. As you can see here, RSI is trying to pick up a little bit. Stock is also trying to pick up. It's a low dollar stock, and it also has good gross margin, as you can see here. And institutions are buying into it a little bit, which is also good. So I would be, I'm willing to buy a little bit and keep it for a while. Next is Weibo. Weibo is the Chinese company, internet play, and right now it's in the consolidation pattern here. RSI is kind of, it's a flatlining to up a little bit. So I feel like at this point, maybe it's okay to buy a little bit. And only red flag is this company has got a lot of debt. So that's one thing we have to watch out for. And from a sales perspective, there's a positive sales. There is a nice gross margin. Institutions are buying, a little bit slowly, but there is still some positive institution buying. And they're up for the year, up for half year, up for a quarter. Now at this point, they're a little bit down. So I would be watching this a little bit and would not buy too much, but it's okay to buy a little bit given low RSI. Stock is trying to stabilize and consolidate. Next is HRTX. It's Huron Therapeutics. As you can see, a stock is trying to make its way up at this point. Stock is up, RSI is ticking up, which is a good sign. And if you look at the numbers here, they got nice quarter-over-quarter sales, nice gross margin, and short ratio is high. RSI is also low. So with RSI ticking up at this time, I think it's RSI is a little bit high actually. So I would probably wait on this one a little bit because it's gone up so much in last couple weeks. Probably it's a good time to wait a little bit, look out for any sell off, then buy. But if you want to buy little bit, it's okay. It's a $17 stock. Only thing I'm looking at is RSI is around 60, so you got to be buying a little bit lower, not too much. Next is KPTI, Cario Pharma Therapeutics, and this is series of lower lows for most part here. As you can see here, it was done it was in a consolidation range for a while. So with that, there's a nice say quarter over quarter sales, nice gross margin. Looks like institutions and insiders, they're passively slowly selling a little bit, but not too much. They're down for the year, down for half year, down for quarter. Probably now they maybe they might provide consolidate. I would think I would buy a little bit, watch out for watch out for any uptick, and then add more. Next is VLDR, Velodyne LiDAR. This used to be one of the darlings in the Wall Street a while ago with their autonomous driving technology and around the LiDAR technology. Stock has fallen off drastically off late because of the short sellers, and there is a lot of competition in this space. As you know, there is multiple companies in this workspace. So that's why company kind of sold off heavily. There is a lot of these lawsuits because stock has come down drastically. I think they're also showcasing some new solutions here in the Shanghai Auto Show. I feel like at this time, because share has dropped so drastically, all the way from $35 to $13, there is some stabilization and consolidation here, and RSI is also ticking up. I feel like this may be overdone at this point. I'm willing to buy some and take it from there. They're down for half year, quarter, month. Last week it's 0%, so it's showing some signs of improvement. And institutions are buying. That's a good sign here. 47% positive institutional transactions. That's always good. Nice gross margin. And next is Cinemark. Cinemark is a recovery play. I think as people get shorts, people will want to watch movies, go outside to theaters. That's why stock has done nicely, and now there's a small downtick. So I'm willing to buy a little bit and hold it for a while, see how recovery play will turn out. And as you can see here, its sales is down 87%, gross margin is good. And institutions are buying into it at this point. Everybody is waiting for this recovery play. And if you look at the news here, I think CEO says, hey, they're waiting for this rebound because everybody gets short, then there will be rebound. Next one is KDMN. It's Camden Holdings. This has gone up, down, up, down, up, down. Now it's kind of down in a box consolidation box here. RSI is showing some strength here. I think they also have some. One of the negative news on March 10th, FDA has extended review of their one of the drugs, which makes the stock to come down. That's why I think in March they kind of dropped because of this negative news. And they got negative sales, nice gross margin, and there is nothing. If you look at the stock, it has done negative for the year, half year, negative for 1 year. In last week, it's shown some positive signs. I think at this point, maybe it's kind of overdone. there may be a play here to buy some and take it from there. Next is TXMD, Therapeutics MD. So as you can see here, positive sales and nice gross margin, and I think they also they're down for the half year, down for quarter, down for the month, also down for the week. So I feel like at this point, probably it's down so much. It's a $1.18 stock. It may be okay to buy some and wait for the uptick. And looks like there is some approval from UK and Belgium for their hormone therapies, which is always good. So next is Inseego here. Inseego is one of the, it used to be a 5G darling a long time ago, as early as this year. But since February, they've dropped so drastically, and now they're trying to make a bottom, a consolidation here. As you can see, our RSI is stabilizing, trying to a little bit tick up. I think at this point it may be okay to buy this, and I think wait for the uptick. They're also showing some positive signs here. They're coming up with MiFi 8000 in Canada. I think some positive news here. Nice quarter over quarter sales growth, nice gross margin, and their short ratio is high, as we know very well. They're down for the year, down for half year, down for the week also, but I see some signs of stabilization. Low dollar stock, I think it's okay to buy some and keep it for a while. Next is Solar, which is Maxion Technologies. Stock, as you can see here, reached its top somewhere around 65, fell off all the way to $18 here. RSI is also ticking down. I feel like this might have a day or two leg down, but I think it will try to pick up as we go forward. Typically, all the solar stocks are down in the Wall Street these days, so I feel like it's punished enough. And if you see here, they have a negative sales growth, negative gross margin at this point, and RSI is very low, which is oversold completely. I feel like there may be a play to buy some, and they've been down for the half year, quarter, month. They're down all along. There may be a play to buy some and wait for a pickup in the stock price. Next is Sun Power. Same story. It's in the solar. Looks like stock has done nicely the whole last year, even into January. Then it fell off a little bit. And here also, negative quarter over quarter sales. It has got some positive gross margin, which is good. It has done tremendously well for the year, but since quarter, month, week, it's down. I'm accumulating this a little bit at a time, so that way we can participate in the upside move. Next is Coheres Biosciences. Again, stock has dropped drastically from $22 all the way to $14. Now there is some sign of stock going up. As you can see here, RSI is also ticking up. And these guys got nice gross margin here. And their short ratio is 21%. I'm willing to buy some of this stock and hold it for a while. I think they also have some positive news here. Some submission for FDA approval, which is always good news. So with that, let's look at a couple more here. Fastly, it's a Wall Street darling long time ago. This used to be, this company was used by TikTok for their content acceleration, and TikTok was one of their primary customer long time ago. But I think now TikTok has moved out. They're using somebody else. I feel like this stock has come down so drastically. Now it's stabilizing. RSI is also stabilizing. It's trying to go up. I feel like it's a good one to hold on to it. And if you don't have it, it's okay to buy some, I think, and take it from there. And I think there's a news from Motley Fool that some of this stock is down so much, it may be good to buy at this point. Tilray is into cannabis. I think it's down a lot. They're also acquiring Afria, low stock price at this time. RSI is also stabilizing at this point. I think it's okay to buy some. Even all the cannabis stocks are down so much of late. It may be okay to buy and hold for the tide to turn. Next is Li Auto. Li Auto used to be one of the darling stocks long, when they started last year. But now, as you can see, your stock has come down. Most of the EV stocks are down. And I think looks like they also got some financing done. They got $862 million convertible notes. And if you look at here, they got positive sales, good gross margin for an auto stock, and they're down for half year, quarter, month, even for the week. I feel like it's okay to buy some and participate in this whole EV stocks to go up. Eventually, they will go up. Next is Mavis, MVIS. It's the Microvision. They're into this automotive EV play again. I think the stock has done badly from a sales perspective. Gross margin is good, it's positive. I like here the institutions are buying this share. Same for Tilray and Fastly also. That's why I like when institutions are buying into this stock, and they've done tremendously for the year and half year. But since last month, they're so getting sold off a little bit. I think it's okay to buy a little bit at a time here. As you can see here now, if you're buying now, you are a contrarian because stock is falling down and RSA is also falling down. I think it's okay to buy some and be a contrarian. So that's the end. So in short, these are all the stocks. Let me go all the way up here. So I would like you to take a look at these stocks here, and you can pause and look at some of these things. Look at the chart. The way I like to place it, I like to see the stock which is fallen down drastically. There's a high short ratio, but they're trying to show some signs of strength at this point, with stock price itself stabilizing, RSI ticking up. That's and good fundamental like sales and gross margin. That's when I would go buy in a little bit and take it from there. With that, thank you very much. Happy trading.